Shares of Palantir are up around 15% at the time of making this video after the company reported pretty strong Q4 numbers, but an especially stronger Q1 and 2024 guidance. This was my full focus. The focus was on guidance because I did know that Q4, while still strong, was not really what the market was looking at. The market was looking at what 2024 will look like because of everything we've been hearing with regards to boot camps, with regards to the partnerships, with regards to the pricing power, the profitability also of the business. Expectations were pretty high, and I think the company quite delivered. And so right now, the stock is at $19. The top previously was around $20 or so. RSI is still pretty neutral right now. Of course, if the price after hours remains the same, we're going to see an uptick tomorrow. Of course, there's still the earnings call. I'll do a complete separate video about that later on. Now moving on to the annual letter by Alex Karp. First, a little introduction telling us that this quarter they generated $608 million, an increase of 9% over the previous quarter. By the way, they did beat expectations, top and bottom line. Now, they did give us a bit more information here. So our US commercial business continues to be a significant driver of our growth, a trend that we expect to continue. Why is that important? Well, because most of the bearish points by analysts, which some of them are completely warranted, are that, well, the government side of the business is not growing anymore, is slowing down. And so that's the risks for the business, that's the risk for the growth rates. But in my opinion, when we are seeing the growth rates of the commercial side of things, I think it's pretty safe to say that that will take over the majority of the business for years and years to come. So in the US commercial market, our revenue increased 70% year over year to $131 million in Q4 of 2023. For your information, last quarter, that segment increased 33%, quite a reacceleration. They say here they now anticipate that the US commercial revenue will exceed $640 million in 2024, which would represent a growth rate of at least 40% from last year. Again, the importance of a good guide after everything that we've heard is of extreme importance, and currently they are delivering. Remember, this is just the start of the year. They can still beat and race along the way. He continues by saying every part of our organization is focused on the rollout of the AIP, Artificial Intelligence Platform, which has gone from a prototype to a product in months. And our momentum with AIP is now significantly contributing to new revenue and new customers. He continues by saying we conducted fewer than 100 commercial pilots in 2022. Since introducing AIP last year, we have already conducted over 500 boot camps on top of the more than 130 pilots we undertook in our commercial business in 2023. In my opinion, this is just the start. AIP is the future of our company, and we believe that it will become the dominant platform for the entire industry. Our progress is not limited to our sales expansion. We are also reshaping the efficiency of the whole company as we continue to focus on profitability across our organization, as you will see, especially with regards to free cash flow and the free cash flow margin. They continue by saying here in Q4 2023, they generated a profit of $93 million, cementing our fifth consecutive profitable quarter and making 2023 our first profitable year since our founding. Consequently, we continue to be eligible for inclusion in the S&P 500. For 2024, as a result of our sustained and growing profitability, we see a path towards $800 to $1 billion in adjusted free cash flow. By the way, still have not repurchased any shares. So there's still that $1 billion share buyback that they can use to reduce dilution, which I believe shares have increased around 7% year over year. So sooner or later, I would love them to buy back shares, not because shares are extremely cheap, but to tackle the dilution problem. He then ends with, we remain committed to building a business that will survive and thrive in any type of macroeconomic environment. As of the end of 2023, we maintained $3.7 billion in cash, cash equivalents, and US treasuries, representing an increase of $1.1 billion from the year before. And then says, our company was built for the world as it is, not as we hope it might be. And that world has proven to be far more disjointed and dangerous than many would have predicted. Sadly, this is very, very true. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe. If not, we'll really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so Palantir reports its 5th consecutive quarter of GAAP profitability, 4th quarter GAAP EPS of 4 cents. So let's look at the highlights for Q4, and then I have some comparisons here written down on a piece of paper, old school. So GAAP net income of $93 million, representing a 15% margin. GAAP income for operations of $66 million, representing an 11% margin. GAAP earnings per share of 4 cents, adjusted EPS of 8 cents, and revenue here grew 20% year over year and 9% quarter over quarter. Finally, we're getting back to those 20% or more growth rates year over year. I really hope we can sustain that. As for US commercial highlights, US commercial revenue grew 70% year over year and 12% quarter over quarter, as we've discussed before. US commercial customer count grew 55% year over year and 22% quarter over quarter to 221 customers. And I believe last quarter, US commercial customer count increased 37% year over year. So again, quite a nice increase. As for US commercial total contract value, TCV, is $343 million. Last quarter, $252 million, representing 107% growth year over year on a dollar-weighted duration basis. As for US commercial remaining deal value, that grew 32% year over year and 28% quarter over quarter. Now, as for the overall commercial revenue, that grew 32% year over year. Last quarter, commercial revenue increased 23%. So again, we're continuing to see here an acceleration of growth with commercial. Government revenue only grew 11%. Last quarter, that grew 12%. Customer counts grew 35% year over year, of course, with all the help of the commercial side of things. Adjusted income from operations was $209 million, representing a margin of 34%. Cash from operations, $301 million, representing a 50% margin. The same here for adjusted free cash flow. Now moving on to Q1, they expect revenue to be between $612 and $616 million, and adjusted income from operations of $196 to $200 million. As for the full year of 2024, revenue to be between $2.65 and $2.66 billion. US commercial revenue in excess of $640 million, representing a growth rate of at least 40%. Adjusted income from operations of $834 to $850 million. Then adjusted free cash flow, as we mentioned before, basically $900 million at the midpoint. GAAP operating income in each quarter of this year, and GAAP net income in each quarter of this year as well. Now we can scroll down and look at how much they are actually making thanks to interest income. By the way, if you want to look at expenses here, total operating expenses are up year over year, but not that much. With regards to stock-based compensation, that is also up year over year for this quarter, but again, not by much. And actually, if we look at the difference between 2022 and 2023, total stock-based compensation is actually down. The decrease comes definitely from sales and marketing. In 2022, that number was closer to 196 million. This year, 160 million. Also, nice little decrease here in G&A, 230.56 million in 2022, and just much lower, closer to 181 million for 2023. Now, moving even further down, looking at the interest income. If we compare 2022 to 2023, we're basically more than 6x that number. And for the same quarter last year, went from 12.75 million to now $44.54 million. So of course, bottom line gets helped quite a lot thanks to interest income. Now, last couple of things here. Again, I want to reiterate, for a company that is now expected to generate around $900 million in adjusted free cash flow, that has still $1 billion of share buybacks that are untouched, If we look at shares outstanding, if we look at the increase each and every year, some might say, well, it just doesn't make any sense. Are you serving the shareholders or are you serving the people inside the company? Because if the dilution continues like this, of course, the company's growth is outpacing it right now. But still, as shareholders in the long term, you would like to see a decrease each and every year, not an increase each and every year. So this is certainly a number to keep an eye on. But overall, to conclude, these are the numbers I'm certainly looking at. I'll be waiting for the earnings call and the presentation as well to dig a little bit deeper. But what I'm seeing right now, I'm certainly quite happy. Definitely bottomed, as I mentioned in the Wall Street Journal article, which took some of my words out of context, but okay. I'm happy with this report. I'm happy that we're seeing growth continue to accelerate. I'm happy that we're becoming actually more and more profitable as well. Now it's time to continue to execute, to take even more market share, and maybe to reward shareholders throughout the years as well. Of course, do share your opinion down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.